Michael, what are the biggest tailwinds for global growth stocks right now? And then we'll get into the headwinds.
Sure. It's a compelling time to invest internationally. We see many tailwinds that should support international growth going forward. One, the weaker dollar should drive capital flows into ex-US markets, including emerging markets. Two, the AI infrastructure build-out remains robust, and there's plenty of ways to get exposure internationally. Three, the defense budgets are structurally growing in Europe and Japan and expected to multiply over the next few years, supporting the defense industry. And lastly, international and emerging markets are heavy asset rich, which we're increasingly more interested in given the obsolescence, they have less obsolescence risk due to an AI-driven world.
Okay, so that's the bull case. What about headwinds? Tell me the bear case.
Biggest risks this year are going to be geopolitical risk, as we're seeing now with Iran and in the Middle East. Also, a K-shaped consumer economy could create some weakness in the consumer. And then also just AI as an overhang on different sectors and different industries.
Let's jump around the globe, if you will. So what are the best areas, regions to invest in right now? Is it Europe? Is it Japan? Emerging markets? What do you like?
Sure. We're actually increasing our exposure to Japan, mainly because we see a few tailwinds in that market. The first is, of all the developed markets, it's the only one where rates are actually rising. So that'll drive strong net interest income for financials. Two, we're seeing a structural improvement in capital returns for the Japanese equity market. That's driving higher ROEs, record share buybacks, and valuations remain very attractive relative to the US. And lastly, with Takaichi and this LDP party consolidating the lower house and gaining power there, we're expecting to see fiscal stimulus and strong defense budgets going forward.
How applicable is the AI growth story abroad? We know what it has been doing here in the US, especially with the hyperscalers, but what about abroad? Is the AI in bubble mode? Does it matter elsewhere?
Sure, there's still a lot of exciting opportunities in AI. We still think we're in the early to middle innings, given where we are in the build-outs, given where we are in adoption. We're starting to see monetization of AI by enterprises globally. And internationally, there's many ways to get exposure to that. So we look at it in three different buckets. We have the builders, such as the TSMCs of the world, the ASMLs, the Schneider Electrics. We have the adopters, such as Tencent, who's going to use AI to better their business. And then the AI natives, which are mostly US, like OpenAI or Anthropic. But what's interesting is you can actually get exposure to those internationally through public vehicles like SoftBank or SK Telecom.
And then finally, can you talk about valuations? There's a lot of worry about a lot of those AI plays and Magnificent Seven in terms of valuation here in America. What about in terms of foreign stocks?
Sure. So we're actually very valuation disciplined. We're constantly, there's three different reasons why we would sell a stock. One, it hits our price target. Two, the thesis is completed or it's thesis drip. And then also we may have higher conviction ideas. So we're constantly rotating the portfolio into areas where we have higher conviction, higher risk reward. So in some of the picks and shovels of AI, we've already taken some profits in some areas, and now we're looking for more of the secular adopters. And then we do have a proprietary factor model on our team, which is very unique to us. And that helps us to rank names based on earnings upgrades, earnings upside, as well as valuations. And the ones with the best combination of those will be at the top of the model. We're constantly leveraging that to recycle names that are higher conviction, higher risk reward, better upgrades, and better valuations.
And then just quickly, what are some of the names or sectors that are at the top of that list right now?
Sure. Some of the names that we're investing in right now, in this AI-driven so one of the areas that we're pretty excited about actually within AI, so we've seen tremendous spending for training, for inference, and that's creating lots of bottlenecks on things like memory, right? HBM, DRAM are in short supply. We're seeing a record divergence in supply and demand for memory. So what we're seeing already, we expect to happen even further going into the new year, later this year, is the memory companies are going to need to spend more on CapEx to build out supply to meet that demand. So we're actually investing in the semi-cap equipment companies like an ASML, ASMI, or Tokyo Electron, for instance, which have high exposure to memory-related CapEx.
All right, well, thanks a lot for coming on and talking about it.
Thanks for having me in.